Test, check. All right, good evening, everybody. Hope everyone had a fantastic Sunday and a fantastic week. This past weekend was my birthday, so had to take a few days just to enjoy the weekend with friends and family. So, hope everyone's ready to go for this week. We got a pretty exciting week, a dangerous week for the new trader. So be prepared. There's going to be some important things that I talk about today. So again, hope everyone had a great weekend. I am going to go ahead and get started. We're going to do our weekly prep where I'm going to go top down and identify some of the things that I'm looking at and some of the things that you might want to take a look at too. So let's go ahead and get into it. So, okay, so this week, first thing we look at, economic calendar. We are looking at Monday ISM manufacturing PMI at 10 o'clock in the morning, and then a lot of Fed speakers throughout the day. So, and keep in mind, last week we ended pretty much even. Bulls and bears kind of like got together and created what's called a doji in candlestick analysis. But yeah, basically this week we have ISM manufacturing at 10 a.m., 11 o'clock. Fed Powell speaks. So afternoon is going to be like late morning to afternoon. London close to afternoon is going to be a little bit goofy, particularly on Monday. Tuesday, we've got a JOLTS opening at 10 o'clock, so keep that in mind. That's where your 10 a.m. ICT silver bullets are going to form. And then Wednesday, you have ISM services PMI, some ADP non-farm employment at 8:15 in the morning. So some early morning catalysts there. And then when it gets to about 10 o'clock in the morning, you want to be as done as you can because there's a few Fed speakers that speak during that time, 10:25, 10:30, that are going to mess with your ICT. That's going to mess with your, silver bullet. And then, of course, Thursday, you have a little bit of injection on employment claims, but towards the end of the day on Thursday, you want to be out of the market. You want to be just a spectator because there's a good chance towards the end of the day, it's pretty much just going to find its equilibrium point and stay there. So Friday, non-farm employment change, that 8:30 a.m., that's where the market's going to drive to whatever direction it's going to want to go to at the time. That's going to serve, that plus unemployment rate is going to serve as a huge catalyst. And so you want to be careful where we're at particularly, and I'll point a few of those things out. So from a Apex perspective, I know some of you have been asking about that too. I have about, I think it's about six or so accounts, performance accounts, ready to go. And I think there's 2 more that are gonna finish tomorrow. So that'll be 8 total. And then there's about 10, yes, like 10 that are waiting to pass after I get through 7 trading days. So I'll have 18 total performance accounts at the end of this week. That allows me to trade copy very small amounts of contracts, and seeing, no more than maybe like 1 or 2 micros can net me 25, 50, 70, 80 bucks. And then even if you multiply that by 3 or 4 accounts, that's still a solid return. The reason why I'm going to be doing that strategy is because 1, I'm able to pass these evaluation accounts very easily now. And 2, the way I trade is it's a lot easier to hold for much larger moves, but the dollar amount, psychologically, it needs to be a little bit larger for me to unfortunately, it needs to be a little bit larger for me to really feel like I'm doing enough. And that is something that I have been working to curtail. So just, take a look, be careful when you get to your performance accounts. If you only have 1, then still try to risk down. It's not going to feel great at first, but over time it will add up. So we'll talk. Let me know if you want me to talk about Apex strategies in general. Drop a comment down below. Happy to do so. But yeah, so this week, let's get into the charts. We're going to start at the quarterly. So we kind of see, let me see if I can take a look at all these drawing objects. and we will make them, let me see if I can edit them or not. I can't. Can I? I can do this probably. Okay, great. So as you can see, we came down to this quarterly fair value gap here, then we came back up and rejected that quarterly bearish order block here. So right now we're on the way back down. It's not going to be a straight shot down, but I do think that this short-term low still is one of the next areas of liquidity that we're targeting, and the rest of that fair value gap as well in the long term. So let me put these back on for the time being. That's really it on the highest time frame. Let's go down to the monthly. So I'll do the same thing here because I know a few of you want a clean chart here, so it's the only way that I'll be able to properly do this. So let's go through here. So on the monthly, so we can kind of see that we traded up into this fair value gap in a premium, and we've rejected from that point in time. So and we barely went into this area here, this fair value gap, which is still in a premium. If you take a fib, and let me see if I can do this here. I wonder if this will work. You can kind of see that we're not quite down at equilibrium yet. In fact, this fair value gap takes us pretty much to equilibrium. There is a bullish order block when we get down to 1260, 600, 222, but there's so many relative equal lows down here. I can't imagine we don't revisit 11,000-ish area with the economic events that are occurring right now. So yeah, I think that is something that I am looking for. Yes, we're at the start of a new month of October, so take that into account too. If you're thinking that you will have a bearish month, that your bias is bearish, you want to see the beginning of the month go up a little bit, and then you want to see it close dark, right? You want to see it go down further, aiming for very specific liquidity. Now, keep in mind, October, November, and December traditionally are bullish. So what does that mean when we start to see things that are bearish? Well, that means we're in for one heck of a run down south. So kind of see December bullish, November bullish, October of 2021 bullish. We see October bullish, November bullish. No, these were in a discount, and this was in a premium as well. So October, November, and December, we had that nice flush downwards, right? So that scared a lot of people out from going into this nice run that we've had this year. Now we're back in August and September. So it's very possible that we see October, November, December, and we see net new highs. I don't see that in this economic environment, but I have yet to be swayed. So let's see what happens. If we see this short-term low get taken out, I think we're going to head down further. If we see this short-term high taken out, then it's very well possible that we end up going for the rest of the time. I don't think that there's enough data yet to find that out, but we can see that these lows have been taken out, these highs have not been taken out, and we continue that trend. So let's go into the so you know that this fair value gap is what I'm eyeballing right now. So let's go into the weekly. So on the weekly, I'm gonna zoom out a little bit so you can see a little bit more. You can see within this price swing, we're still at quite a premium. One thing that I want to draw your eyes towards that did form this past week was this fair value gap here. From this low to this high, there's a fair value sell side imbalance, buy side inefficiency. I think that we go up into that, no more than half, and then we take out some of the lows in the coming week or two. let's see if I think this might be a good chart to bring back all my drawings. It's going to look a little bit messy still, but just bear with me. So remember, the red lines are my quarterly or 3-month and 1-month lines. The yellow ones are my weekly lines, and the purple ones are the daily levels. Try to disregard the lower ones. Just focus on the yellow right this moment, because that's what we're on. We're on the weekly, right? So try to focus on just the yellow ones for now, because that's all I'll be talking about right this moment. So we formed this weekly imbalance here. And right now I anticipate, if we're bearish, I would anticipate us to have a bit of a rise up into this. And want to show you something as well. From this swing high to this swing low, we see that the 50% mark is up here. That's just past that midpoint of that weekly imbalance. There's also a daily imbalance high up there, as well as we're well within a inversion fair value gap high. We don't want to necessarily see it go all the way up there, but you know, it is what it is. We'll trade price whichever direction it goes. There's also a weekly volume imbalance up there, that gray box that you see here. That is a weekly volume imbalance. And when we go down to the daily, we'll show that as well. Let me see if I can make that a little bit cleaner here. There we go. Okay, so on the weekly, we see targets up to the upside here. We want to, if it's going to go up further, we want to see it break that 15060.75 mark. If we want to see it very, very bearish, we wouldn't want to see it go any much higher than maybe the midpoint of this wick, which it's already at. So I don't know, this week I would pay attention, and when we get down to the lower time frames, I would pay attention to the gap that forms on the lower time frame for this new week. We will touch upon that in a moment. I do want to also take a note of this to this. I want to take a note of that consequent encroachment here. So about here, we're going to mark as a weekly wick consequent encroachment. Okay. It's 14,727 where we're going to put it. And we're going to label it as such as well. 14,727, 1 week wick consequent encroachment. And actually, I think I'm going to do a down wick as well, because I've gotten confused in the past by my own lettering. So we're going to keep that marked on our charts so we can see it on the lower time frames as well. So let's go down to the daily now. Okay, so daily chart, same deal. We're in a premium still, as you can see when I zoom out. And we can see that this daily has gapped open. So you can see it jumped, it closed here, and it opened up here. So I would recommend you have that gap ironed out on your charts as well, because it's going to return to that gap multiple times this week, I would assume. So we do see though that price went well above this relative equal high and has now opened above it. So that leaves quite a bit of a gap to fill when we continue back downwards. So when we get down to about a 15-minute chart, it'll be, or even an hourly chart, it'll be a lot easier to see that. But that's going to be very important because it's a place where there was zero price action, and price tends to gravitate towards imbalances. Oh no, lost my audio. Test. I can still hear me. I am still registering audio. Test. Test, test, 1, 2, 3. All right, well, hopefully you can still see that audio here, but I hope I didn't lose audio at least. But it looks like my mic and audio is still registering here. I can see it on the microphone. Gotcha. Can you hear me at all still? Test, test. 1, 2, 3. Test, test. 1, 2, 3. Test, test. 1, 2, 3. Well, hopefully it's nothing on this side. But if the audio is gone, well, so be it. I'll still have these levels over here. Actually, I might be able to actually go log on to my own YouTube and then see if I hear anything here. Okay, I still hear myself on the audio. I logged onto the YouTube on my own computer and I can hear myself talk on delay. Check your speakers. Seems to be working. Yep. Okay. Well, hopefully this works for you, JP, but thanks for joining. We'll continue onwards for now. So we see that we formed a short-term high. It went well above this rejection block here, but closed well below. And we open up higher, so I do anticipate this week moving upwards, but I anticipate us going kind of like within this fair value gap. Like we will close that at some point. But from a daily perspective, these purple lines here, we see that we have a weekly objective that hasn't been touched yet. That's sell side imbalance, buy side inefficiency. Remember on the weekly level? We see that formed on the weekly. So I anticipate we go up into that. Why is that? So when I take a swing high from the latest swing down to the swing low, you can't see that very well, but that 50% mark is right below this volume imbalance, which is right below this midpoint of the weekly sell side imbalance. So those three right together are very, very interesting to me. I was thinking it might head up there if it had some juice. So I'm looking for that right now. Oh, good. I'm glad you got the sound back. So I'm eyeballing to see if it has enough juice to continue upwards in that direction. The reason why I'm curious about that is because we have this SIBI low, which we broke and then rejected from. I would like to see us maybe go up there, break it again, and then maybe head up to here and reject as well. There's a lot of stuff that will cause things to act weird this week with the different economic events, but there are these daily inefficiencies that we might still tackle. That volume imbalance is very interesting to me because there's a volume imbalance on the weekly, that gray box that you see back there, and there's also a volume imbalance and an old new week opening gap at that area too. So within that area, I think there's a lot of, and the swing equilibrium is at that point too. So lots of confluences there and what would be deemed a fair price to go short again. So I'm going to remove this for now and go down. So I think we do have, given that balance that we did off of a monthly buy side imbalance high, I think that we have a little bit further to go upwards first before we go down. Plus, when we go down to, we'll go down to a few lower time frames to showcase why. So on the 4 hour, we see that at this 4 hour chart. Remember, we're still in a premium here. Let me zoom out. So remember, we're still in quite a premium, right? So when we zoom in on what happened this past week, we can kind of see how we came up to this daily imbalance low and just dropped from there. These black candles have been larger than green typically, so I think that we're still going to head upwards. I see this 4-hour imbalance, and it's drawing my eyes to it very much so because let me see if I can zoom out here and have the weeklies on here. So we see that we had a low, a high, and then we kind of like displaced that here. This is what I would consider to be a potential mitigation block where we see price went down, people went long, they got completely blasted through here, and if they get there again, they'll mitigate it by selling. And not only will they mitigate it by selling, but others will sell there as well. So that is why I still think we could head up that way. We've proven that we dipped into this inversion fair value gap on the monthly a little bit and then have now come back in there. So I'd be curious to see what happens around that volume imbalance level. At least that's what my eyes are drawn to right now. If it gets up to here, I mean, it's very possible that price can spike during non-farm payroll if it doesn't get up there before Friday. I would be looking to see what it does around that point in time or around the halfway point of that wick. Because that 4-hour imbalance is quite large. I don't imagine we don't go up to tackle that sometime this week. So that's it on the 4-hour. On the 1 hour. So on the 1 hour, we see that on a short-term perspective, after we hit that monthly key level here, we created a short-term high, market structure shift, right? Lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, lower low, barely. So this week, let's see how Monday plays out. I would have your hourly levels marked. I think that this 14,811 right there, that low. So you can see these two lows here. That is very suspect to me. I don't know if we take that out Monday, Tuesday, Wednesday or not, but it is very suspect to me. But I also see, I mean, below here, we certainly see some untouched areas of liquidity below us on the weekly. So unfortunately, we also now have untouched areas above us on the weekly. So what that means, we have a handful of economic events this week. There's a lot of room for things to move upwards, but whichever direction it moves towards, I would be curious. And I mean, I've seen non-farm payroll just rocket through things like this on the downside. So that I still, on the macro scale, I'm still bearish based on where we are, but I think we need to go up first a bit this week. So on the hourly, I don't have any of these fair value gaps marked, but I will probably be marking this one here as a potential upside area to aim for if it can break right there. That SIBI low, it's not touched yet. This is a weekly SIBI that formed, and that's a south side imbalance low. So I think that we will for sure come back down to grab. Let me make this a little bit larger. For sure on the hourly, you can see it a lot clearer, but this opening range, or this new week opening gap that formed, there's a liquidity void right here where there's no price. Zero price action throughout that whole thing. So this I fully anticipate us coming back to, whether it's sometime in this week or the day. We will come back through and knock that out. I just don't know exactly when. Based on this price action on Monday, it's too difficult to tell right this moment. Yeah, I think I think that's really about as far as it makes sense to go on this time frame. Any lower, I mean, it doesn't really matter for the lower ones, but um, the hourlies at the very least giving me an idea of, hey, some higher highs have formed. Lows have not been broken yet, except for just for this one here is barely broken by a pip. So I think that we're gonna head higher first. Everything points to that right now. I don't know if maybe midday we might head back down and fill out that fair value or that liquidity void, but let's see. And on the 15-minute, let's go down to 15-minute, and that's probably the last one that I'll talk about during weekly prep. So on the 15-minute, it's pretty clear that we formed, higher highs. We moved up, came back down to equilibrium, went back up, came back down to equilibrium, went back up to end the week. Yeah, I think immediate areas of liquidity, that relative equal low here in the first part of the week, this high here for sure, and this imbalance here. So I think that's I'm gonna see how Monday plays out. I think Monday we have 10 o'clock ISM manufacturing PMI, so I would be looking to see if there's a fair value gap in one of these directions, depending on what liquidity is taken out beforehand. So I want to look to see what happens. Where are those morning liquidities forming on the New York session and London session? What happens? Where are those formed? What could be taken out first? And then where could price go to again? So yeah, I think that is about it. I'm going to see what forms the rest of the time and the rest of the week. So let's go back out to the daily for now. And yeah, I mean, let's see. Maybe I have to go out to the weekly actually. Yep, still very much in a premium. So let me remove some of these drawing objects here. Yep, so we see the slight market structure shift with this short-term low and even this short-term low being taken out, right? So we see that shift lower. We haven't had a higher high yet. We have a second one here and that weekly imbalance up here. So I fully think that we're going to head up into that at least halfway. You can see this imbalance a little bit easier now. So I think that we'll tackle this. I would, if I was super bearish, I would see this barely come up into this and then head back downwards. But because this week has the landmines that it has, I think we're going to go up and fill that out a bit more. Yes, we have a bearish order block here, but we have obviously gone up beyond it already. I would have liked to see it just not even get past this mark very, very much, but it is only the beginning of the week. So with that, I think that's it. I'm going to let the Asia and London range play out. I'm going to see what lies during that time, and then I'm going to look for a New York session. Probably I'll look for a liquidity grab if there's a short-term low that forms during London or Asia, and I'm going to have it and seek towards that fair value or the liquidity void that we showed on the lower time frame here. So I want to see London take out this, or maybe get close to it for New York, and then us take that out. Let me see if I have that on my drawings. I can't remember if I marked that. Okay, so let me mark that here. Let me make sure I didn't mark something else here. This was a previous rejection block. So I'm going to take that off right now. And we are going to mark this high here. We're going to bring it out to the end of Monday, and we're going to bring it out to 5 o'clock p.m. So that we have that there. I'm going to make that a buy side imbalance, or buy side liquidity. We've got that there now. What was that value? 15007.25. So I'm going to be curious on a lower time frame. I'll be curious to see what happens here. I want to see on a lower time frame. I want to see what price does at that very moment, because we haven't taken this liquidity void out. I would like to see it reject there, come back down, take out this liquidity void, maybe like late Monday or Tuesday, and then go back up for Wednesday, and then kind of like find its equilibrium point Thursday, spike up for a non-farm payroll Friday, and then drop down and kill everything down here on Friday. That's what I'm hoping will happen. But let's see what forms on Monday and Tuesday. You know, let's see what kind of market structure forms throughout the week. There's too much stuff above and below. It's not guaranteed that it'll reject from here too. It could go all the way up and push up towards this one. Or if it's got enough gusto, it could push up towards this one too. There is definitely too much liquidity above and below. Let me zoom out a little bit. So as you can see, there's a lot of higher time frame liquidities above and below. But what I would imagine we would want to do is, again, because I'm bearish on macro, I want it to go up here first to take out any new longs, any retail longs, people who are swing trading long. You know, people are saying like, you know, oh, bears, you know, talking shit about the bears. Until I see a very, very higher time frame shift, a weekly or above time shift, I'm still bearish. We're in a premium. There's really strange economic events here occurring. But I am gonna, you know, be nimble. I do think that we'll see some upside and kind of trick bulls into coming in, and we'll take care of that. We'll take advantage of that. I hope to be around when I can take advantage of that, but I'm looking for those bigger black swings again. So with that, I think that's going to be it for me tonight. Hopefully this helped out. JP, thanks for hopping on. It's good to see you, brother. Hopefully you've been trading well. I've only been able to trade here and there, but it's been fruitful. So I think this week I'll be trading a couple of the PA accounts with very low, very, very low risk. Maybe 1 or 2 micro contracts alone, and I'll be copying those across 3 or 4 accounts. So good luck, everyone. Hope you have a good day of trading tomorrow, and we'll continue to do these every night. Basically, I'll record throughout the day. If I'm able to, I'll talk about the markets in the morning right before, maybe like 8:30, 8 o'clock, 7:30, if I'm awake. And then I will record the whole day. I will not be recording some of the trades that I take, but I'll definitely mark the time, the price, things like that. And I'll make sure to put that in the comments. I know somebody requested that, and I think it's a fantastic idea because I'm primarily recording all of this stuff here, right? So it's a great idea. Thank you for that idea. I'm going to incorporate that. And yeah, we'll continue to build on that story. At the end of the day, I'll try to come in at least write a notepad of my ideas before I close the stream on the live action trading days. And then, of course, somewhere in the 8 to 10 p.m. time frame Eastern, I'll come back and do market review. So we'll try to keep doing that every single day, even when I'm not trading and I have to go into the office on Tuesdays and Thursdays. So with that, have a great evening. Love you guys. Be safe. Get some rest. Talk soon.